episode, the very best episode of the One Bite at a Time show, where we go out and find the most relevant, most important information you need right now in your business, and we bring it to you one bite at a time each and every week. Because how do you eat an elephant?
One bite at a time.
I'm a veteran myself. I was in the United States Air Force for 8 years, from 1983 to 1991. If you were in any of the other branches, I must say, I'm sorry you had to work for a living. I want to make sure you understand 13 points about a VA loan that are crucial that you understand. There are a lot of misconceptions out there, and I want to make sure you don't have any. So here we go.
Sorry. Number one, VA loans are 100% financing, including the funding fee. Unless you're a disabled vet, you only need 10% disability in order to waive your funding fee.
Number two, this is a big misconception. VA does not lend money. They only guarantee the top 25%. What that really means is if there's a foreclosure, VA will protect the lender from loss. That's it. That's what they do. It's kind of like private mortgage insurance, except you don't have to pay for it. VA does.
Number three, termite reports are required on VA loans. We must complete Section 1 items. The only times they're not required is when we're doing a VA streamline or new construction.
Okay, number four. Now, this is unique to VA. The seller can pay up to 4% in seller concessions, but the seller can also pay the veteran's debts in order to qualify for the loan. That's something that most people don't know about. The seller can pay the veteran's debts to qualify for the loan, plus up to 4% seller concessions for closing costs, prepaid taxes, prepaid insurance, prepaid interest, things like that.
Number five, we always want to request a certificate of eligibility up front. About 92% of the time, this is automatic through the VA portal with just your information. And sometimes we do need to go back, get your DD-214, file an application. And in those instances, it can take a little longer. And that's why we always want to request that certificate of eligibility up front.
All right, number six, also unique to VA and FHA loans, but especially with VA, they're assumable. A lot of people don't realize how valuable that really is. If your loan is assumable and the person who assumes it doesn't have to be a veteran, if you sell your house and the loan, the underlying loan is assumable, let's just say interest rates go up to 9% or 10% or 11%. Don't laugh, it's happened. But let's just say rates are really high and you've got a VA loan at 2.5% or 3.5% or 4.5%. You can sell that loan with the house. That could save the buyer tens of even hundreds of thousands of dollars, depending upon the size of the loan. And that could really help you in the process of selling the loan in the future. You wouldn't get your VA benefit back unless a veteran actually bought it, but a veteran doesn't have to buy it. A civilian can buy it. You just lose your VA benefit until that loan is either paid off or refinanced. But an assumable loan can have great value in the future.
Number seven, credit scores can be low. And I'm not just talking low, but low. VA does not have a minimum credit score requirement. When you run into situations where a lender is asking for your credit score to be a certain amount, it's normally an overlay by the lender where they would require you to have a 640, 620 FICO score. But in general, VA loans do not require a minimum FICO score.
That's right, Roxanne. And number eight, I like to look at VA loans as having shades of gray. Fannie Mae, Freddie Mac, and even FHA are black and white. You either fit the guidelines or you simply don't fit the guidelines. VA loans allow the underwriters to make common sense decisions.
And that brings us to number nine, manual underwrites. Just because you don't get what's called an automated approval through VA, lots of lenders love veterans and our way to serve veterans is to complete manual underwrites. There's a little bit of restriction, but it brings us back to the point about the shades of gray. If it makes sense to an underwriter that the veteran has the ability to repay the loan, that loan will get approved.
That's right, Roxanne. Brings us to number 10. There is no debt to income ratio recognized by the Department of Veteran Affairs. Now, they are recognized often by the lender with overlays, But you can often get a 55 plus debt to income ratio approved on a VA loan, even automated, because VA doesn't really use DTI as a deciding factor. They use a thing called residual income, which means how much is left after you make your payment to live and survive on based upon the size of your family.
Number 11, VA loans are for the veteran and the spouse or two veterans. When you have a non-veteran that is not a spouse on the VA loan, it needs to be approved through the VA for those very special circumstances.
And number 12, when you're buying a home and there's a non-borrowing spouse, in other words, we take one of the spouses off, or the non-veteran spouse off because of their credit, we still have to include a credit report for that non-borrowing spouse because the veteran has to qualify with that person's debts regarding when it comes to residual income. And if the lender has an overlay for debt to income ratio, we need to make sure that they qualify, or he qualifies or she qualifies with their spouse's debt.
Last but not least, number 13, VA renovation loans. For a long period of time, lenders were not offering renovation loans to our veterans, but now they are available. They are definitely making a comeback. Make sure you check out our video, episode number 6, on renovation loans for more information.
And for the wrap up, all agents should find out upfront whether their buyer is a veteran, because in almost every case, a VA loan is the best loan on the planet. Lowest rates, lowest closing costs. That's true about conforming loan amounts. And it's also super true about VA jumbo loans, which can now go to no limit.
And remember, Steve is a veteran himself and a VA loan specialist.